Welcome to the bootcamp series from Zero to Trader. This is a series where you will go through a bunch of steps that take you from absolute zero to actually trading the Forex market, commodities and stocks. We will start with kind of topic for total beginners and slowly move to the more advanced strategies and AI tools. It doesn't matter if you already have some experience or if this is literally your first contact with trading. In today's episode, we were starting from the very basics. What is trading? What is this whole Forex thing? What's the deal with the stock market, investing, buying and selling? We'll also go through installing the trading platform and setting it up with a broker. All of that is ahead of us, so let's roll. First, we are going to talk about what the world of finance is and what the Forex market is, but let me make one thing clear. I'm not going to base this on, boring definition. You can Google in 3 seconds when it started, who invented it, some long history lesson. Those things won't help you later when you actually have to make decision on the market. I want to focus on the things that matter and that you can actually use. So we will put on the table the prices, important and necessary elements. All the rest, the history, long stories, that's something you can read later in a book or talk about over, kind of beers someday. So we leave history in the background and jump straight into the main question. What is the financial market? And we have to understand each other on one basic point. If you have ever made a bank transfer, paid with cash, received money, or use a card to pay for something, then by doing any of those things at any point in your life, you helped create the financial world, okay? All of us globally through every economic and commercial activity, buying, selling, paying, earning, together create the financial world. That's the idea. It's all massively connected. There is no single place, building, island, or country where you can point and say, here's the financial world and this is where it's controlled. It doesn't work like that. And we also have to add one more thing to be fair, okay? Whoever has more money on the market naturally has more influence on it. We can get over it, but that's just how life works. So you have more cash, you have more option, you have more power, and you can push the market around more. That's point number one. Now, point number two. This whole big financial world splits into smaller pieces. It's no secret that the biggest part of it is the currency market, the Forex market. Why? Because everything we do, our work, services, products, the stuff we buy, real estate, cars, different goods, all of that is priced in something. And today, that something is currencies. That's why the biggest part of the financial world is the Forex market. Foreign exchange, that's the name. But that's not only one piece. You also need to know there is a commodities market. We won't break it in, million small categories here. In simple terms, commodities are things like gold, silver, crude oil, corn, coffee, sugar. All that kind of stuff, sits in the commodities group, and you can trade it on financial markets. Then we also have the stock market, companies, corporations, firms. That's another huge market all around the world. We have many stocks exchanges, like, United States, Polish, German, many European exchanges and institutions that handle stocks. You could say the stocks market is strongly connected with the country it's in. Markets look different from country to country. They are fragmented. There is a lot of them. And then we can also look at smaller markets, which I don't want to go too deep into right now. There is one more thing worth, mentioning, the cryptocurrency market. For many years, crypto was kind of on the side, unregulated, not really accessible for everyone. Big institutions didn't care about it. But for the last couple of years, that has changed. Now we can say the crypto market is also a part of the broader financial world. And in this bootcamp, though we mostly touch on the forex market, but that does not mean we will only focus on currency pairs. Definitely not. We just need, a place to start. And I will explain in a moment why Forex is so important. So if I'm saying the currency market is the biggest, what does that mean for me, for you, for someone who wants to do something on the market? It means this. Because it's the biggest, there are a lot of people an institution who want to buy and sell on this market. And this is what you can do on any market through, an exchange or trading platform. You buy and sell. If we are talking about currencies, that's exactly it. You can buy and sell currencies. We'll dive into details in a moment, but to give you an idea how big it is, the daily turnover on the Forex market, the part that's actually recorded, is over $7 trillion a day, okay? $7 trillion every fucking day. That's an insane amount of money, okay, moving through the system every single day. And what does that mean? Not only that there are many buyers and many sellers all over the world, but also that because of this crazy liquidity and activity, the costs of, trading, exchanging, doing business on the Forex market are low. The market is very efficient. You don't really have a problem with, finding the other side. There are always people willing to buy and sell. So we say the Forex market is very liquid. And that's a big deal. If we compare it to some tiny niche market like, pink markers with, whistle attached, that market would be much smaller, okay? It will be harder to find buyers, harder to find sellers. If I bought, a bunch of those markets, selling them later could be a problem. That's the difference. Forex is a huge and liquid, and tiny niche markets are, tiny and illiquid. To make the difference even clearer, we already talked about the Forex market. Now, as a comparison, let's look at the crypto market. The daily turnover on the crypto market is around, 130, maybe $140 billion. It's still a lot of money, but it's much, much less than 7 trillion every day. And that means on crypto it's more expensive to operate. So if I want to build my activity and my business on the Forex, versus on a crypto, then from the very start, just because of turnover, number of participants and liquidity, one place will be naturally cheaper and the other more expensive. And we will head toward the cheaper one, the more efficient market, because it's easier to plan, easier to structure, and more predictable. That's what we want. So do it smart, not flashy, not expensive. You and I are not here to do stuff in the most expensive way possible. We want to do this effectively, right? Okay, so you also need to understand that every type of market has a different level of risk. What's popular, hype, doesn't always make the most sense. And during this bootcamp, I will try to explain that very precisely. Next important point. These traditional markets like Forex, stocks, commodities, are available for us basically from Monday to Friday, 24 hours a day with some exception, okay? The stock market has more time limits. It opens and closes at the set hours depending on the country. So you can't trade stocks 24/5 days, okay? But the Forex market and commodities are basically running around the clock during the week, which means you can trade any time of day. And that's another big advantage for you and me. I can decide when I want to do this, when I want to run my, market business. I'm not tied to a specific city, a community, or even a country. I can live in Poland, the UK, the South America, Brazil, the United States, Australia, China, India, wherever, okay? The market is still open. It's still moving, the turnover is still huge, so I can fit trading into my daily rhythm. Maybe you want to trade at, 11 a.m. East time, or maybe you want to trade after work, after classes, after you finish your day. This flexibility is a huge plus. It means trading can be adjusted to your life, not the other way around, okay? You don't have to rebuild your entire life, change your job, reorganize kids, school, family, destroy your schedule just because you want to trade. You have to drop everything to become a trader is simply not true. That would be super risky, extremely, uncertain, and for most people, just impossible. And good news, it's not necessary. You can organize trading around your current life. Another key point, on the markets, you can basically participate in two ways, okay? There's two ways, as an investor and as a trader. So let's separate them. First, the investor approach. We want to invest money in something, buy something, and expect that over time, okay, our invest kind of thing, it will grow in value or bring us some benefits. It could be, the stock market, a startup, some project we believe in. We assume that the team will deliver their product, okay, the company will grow, or we will have access to a great service, and that we will gain from that over time. Another example, real estate. We buy apartment or, house. The real estate market usually grows slowly over time, not 100% per year, but bit by bit, okay? We can also rent it to generate additional cash flow, but with the investment approach, there's one crucial element. When I invest in something and I want it to pay off in the future, it doesn't matter, if that's in 2 days, week, month, or 10 years. So for the investment to work, the environment around it has to be, specific way, very good, favorable. What does that mean? If I invest in a startup, it would be good if regulation don't suddenly kill their business, okay? The team doesn't fall apart. Founders don't walk away, or the project doesn't die halfway through, okay? Because if the key people leave or the rules change, there might never be a final product or result of my investment. Same with real estate. If suddenly a ton of new, properties flood the market, there's a crisis with loans, or people can't buy, then it might be harder for me to make money on my, property. Sometimes it's geopolitics, okay? Sometimes natural disasters like floods, droughts, etc. Depending on what you invest in, these things can totally change the outcome. So if the environment becomes unstable or negative, the success of that investment becomes, questionable, okay? If the environment is good, stable and supportive, the long term the investment has a chance to work out. That's the investor mindset. And for many people, it's the more intuitive, natural approach. We kind of feel how it works. But there is a second approach, and for us, it's a way more important, the trading approach. And here's the core idea. In trading, it doesn't really matter what you buy. You are not investing in a story. What you care about is that the price of something moves, sharply up or sharply down. That's the key. So the environment around that thing doesn't need to be calm and stable. In fact, the more chaos, the more volatility, the stronger the emotions, okay, the bigger the prices moves. And that's exactly what we want as a traders. So if there is a political tension, okay, geopolitical conflict, the regulation changing, competition, uncertainty, then prices often make bigger moves because people react emotionally. Should I buy now? Should I sell? Is this too expensive? Should I protect myself? So in a world that's constantly changing, like, United States versus China, European Union, trade wars, sometimes real wars, tariffs, this all impacts many assets. Sometimes something skyrockets. Sometimes it collapses because of sanctions, debt, or a crisis in some country. For the people living there, it's a tragedy. Their currency collapses. They struggle to pay for, food, energy, basic stuff. They are forced to make extreme decisions just to survive. Or when there's a drop or float and some important commodity becomes scarce, countries are forced to buy more or of something else at higher price just to secure supply. This all leads to big price moves on the markets. I want to see that kind of moves. This second approach, the trading approach, is about working with those price moves, okay? We try to use that volatility. It's happening non-stop every day. And during this bootcamp, we'll focus on building trading skills that help you operate in that world. If you understand this, then when everything, is calm, economic growth, everyone doing deals, and the sun is shining, you will still be able to make good decisions. But when the chaos hits and everything starts, changing, the pure investor mindset alone will be very hard to handle. That's why in this bootcamp we are going in the trading direction. And before we go on, quick reminder, okay? Hit the like button and subscribe to the channel so you don't miss the next episodes in this series. All right, let's keep going. On the Forex market, which is our main focus for now, currencies are being exchanged, okay? But I want to clarify something. Let's say I have euros and I'm trading the Forex market and I want to do something related to the US dollar. It's not like I'm literally exchanging my physical euros into physical dollars and then walking out with dollar bills. When we trade on the platforms, on the market, we are not buying physical things. We are entering into contracts. These contracts have different names and details, but at the end of the day, it's an electronic record, okay? That's why if I have euros, I can buy gold, for example. Gold is priced in US dollars, but I don't need to own dollars. I can use my euros to open a contract on gold at a specific price, and that contract is denominated in dollars, okay? But I don't actually, convert my euros into dollars physically. There is no exchange office process like, first I change euro to British pound, then British pound to US dollars. No, the platform does all the accounting underneath, okay? So the currency of your account, whatever it's, Polish euro, Swissy, US dollars, whatever, doesn't really matter that much. You use it to open and close contract. And when you close a contract, you get your money back to your account more than before. If you made profit, less if you made a loss. You're not swapping contracts for other physical goods. You are closing the contract and turning it back into your account currency. There is one partial acceptation: the stock market, okay? When you buy shares of company, you actually own those shares in your portfolio. Sometimes you can get voting rights, dividends, different benefits depending on the setup. And sometimes you can even use those shares as a, collateral for other financial operation. Does require a legal structure, but it's possible. On Forex, on commodities, it doesn't work like that. You're the owner of the contract, not the physical asset. When you want your money back in your account currency, you close the contract and get the cash back into your balance. Now, the most important currencies you need to know, their names and symbols, so things are clear during this bootcamp. The main ones traded on the market are, USD dollar, euro, Japanese yen, British pound, Australian dollar, Canadian dollar, Swiss franc, New Zealand dollar. These are the 8 major currencies. From these 8, okay, we can build currency pairs and contracts. So if we're gonna mix them, there are 28 main combination, just mixing one with another. You don't need to memorize all 28. That's not important. Just know that they exist. We will mostly focus on pairs where the US dollars is involved. For example, euro to dollar, British pound to dollar, US dollar to Swiss, US dollar to yen. These are the major pairs, the most heavily traded ones. So you already know what that means. Most buyers and most sellers, easiest execution, best liquidity, and lowest costs. To show you more clearly how buying and selling works, let's take one pair like British pound to US dollars, the British pound versus US dollar. The exact price right now doesn't matter. On the market, you can just buy this pair. We call it buy or long or sell it. We call it sell or short. And if I buy a British pound versus US dollar, I go long. So my scenario is that the British pound will gain value relative to the US dollar. In simple words, I'm buying pounds and at the same time selling dollars. If the pound goes up, if the British pound goes up versus the dollar after I open my trade, the difference between my entry price and the higher price is my profit. When I'm done, I close my contracts. Close the position, someone else take it over in the market and my profit is added to my account. Because there are so many participants, you don't need to worry who is on the other side. The broker and market take care of that. Later we will talk about configuration and how to choose a broker, but this is the general idea. The opposite scenario is when I accept the dollar, gain and the pound to lose value. In that case, I sell British pound versus US dollar. I go short. So for better understanding, everything after the /USD is my counter currency. The first one, like British pound, GBP, is what I'm selling when I go short. So if I believe that the pound will fall and the dollar will rise, I open a sell short position on GBP USD. If GBP drops versus USD, the difference between my entry price and the lower price becomes my profit. Again, when I close the contract, the position is gone and my profit, all lose, is realized. So, I didn't need to have pounds or dollars physically in my account. I could have, had euros, francs, whatever. The platform handles the numbers. All of this happens, automatically in real time, so you don't have to calculate everything by hand. We will see all of this directly in the trading platform soon. I hope this whole process is starting to make sense for you. What contracts are, how they work, and what we are actually doing when we buy or sell. During the bootcamp, this will become more and more intuitive, and I think it will click for you pretty fast. So now, something important about the markets we are talking about, especially Forex and commodities. We basically have two types of markets. The centralized market based on CFD contracts, and centralized market, based on futures contracts. Let's start with CFDs. CFDs, it stands for Contract for Difference. That's the full name. This is a contract that lets you trade Forex, commodities, indexes, etc. But on the decentralized market. Decentralized means There is no single, central exchange where absolutely everything goes. There are many brokers in many countries with their own conditions. They compete with each other, which usually means lower costs, easier access for individual traders, for retail traders, lower minimums. And as a client, that's good for you because there is no single center that controls all trades. The barrier to entry is lower. It's easier and cheaper to get started. So CFDs are very good option in the beginning, okay, in a start, and up to a certain account size. The second type is the futures market, contracts traded on centralized exchanges. These are also contracts, but with different specifics and rules. The futures market is centralized. The biggest volume is in the United States, okay, and a few main exchanges, not dozens, okay. It's definitely more expensive to operate there, higher capital requirements, stricter procedures, more regulation. To make similar trades on futures versus CFDs, you usually need more capital on futures. The upside is more regulation, higher safety. All participants have to go through a specific process. So I usually say, for bigger capital, above around, I think 100,000, something like this, it starts to make sense to seriously consider futures market. The downside, futures are less liquid than CFDs for many instruments. There are, for participants, sometimes it's harder to exit a contract quickly, depending on the product and time of the day. So futures are more complex, the structure is more technical, but we will go deeper in the futures later in the bootcamp, but not at the very start. You don't need it right now. For now, just remember, CFD, decentralized, easier, cheaper, good for starting and smaller capital. Futures, centralized, stricter, more capital, more professional use. Now we are going through the process of registering and opening your trading account, connecting it with a broker, installing the trading platform, and getting everything ready so we can work with charts and real data. We have to set this up for this bootcamp. We are going to use one broker as an example. It will be AXI. Important, a detailed step-by-step guide on how to register, how to verify your account, what to click will be available in a link under this video. So I will also walk through the process here. I use a special link that's important. I go to the AXI website through that link. Why is this important for you? Because using the link we provide lets you open an account with special parameters, okay? Better conditions, lower costs, more flexibility on leverage, generally better trading terms. So we prepared with them. So we have, negotiation different condition than a random client would get. So use that link. It will just make your life, a little bit easier and your trading cheaper. That's the point. For example, your transaction cost will be lower and the account features will give us more options. For example, with leverage, we will talk about that later in more detail. So let's check. I'm Polish resident, so I choose that. You will choose your country, okay? Then we open live account first. Important, we open live account first and only later we add demo simulation account inside the system, not the other way around, okay? So choose your residency, enter your email address, your name, your phone number, make sure it's correct, just click continue and go through the verification steps. The account is created and then you choose that type of account you want. Choose Pro account, the one on the right side, because that's the account with lower cost, faster execution, better performance for what we will be doing during the bootcamp. Very important. Look at the Axis select field. Make sure it is unchecked, okay? You don't want that option turned on. Then you choose the account currency. I personally usually choose US dollar, but if you want to use euro, British pound, that's also fine. Next, choose the trading platform. We pick MetaTrader 4. That's our basic platform. That's the platform we will work with in this bootcamp. Then you set the preferred leverage. Choose the highest, which you see depending on your region. That value might be the different 1 to 100, 1 to 300, 1 to 500, 1000. Choose the highest possible option. The higher leverage we can have, the better for flexibility. We will talk about how to use it responsible later. Then you will fill in your date of birth, country of birth, title, Miss, Mr., etc., your real address. Remember, this broker is regulated, so all data must be real, not made up, okay? They will verify it. You will then see questions about your employment status, source of funds, approximate income ranges. Pick the options that are true for you. You also see a bunch of documents and the policies, terms and conditions, legal stuff. You can download and read them if you want, of course, but you can't negotiate them. You just have to accept. Then you hit the submit, and your account is now being created. And you will see, congratulations, your account has been opened, and with about 2 hours most of the time. You will get your login, your password sent to your mail. I check my inbox with login for the web portal, login and password for the trading account, information for desktop and mobile apps. I click login and find your account. In the client area, okay, you will see your trading account, but payment methods, deposits, withdrawals are still locked. To unlock them, you need to verify your identity. To verify, you have to upload your ID or passport document with your name, surname, date of birth, a unique number like your ID number, and probably a proof of address, kind of utility bill, bank statement, something like this. Then you click submit. They handle the verification very quickly, but in some cases it may take up to 24 hours. But without fully verification, you can still deposit with a card, but only up to certain limits. For anything bigger, you must complete this verification. In the My Account tab, you will see your active real account, your account number, current balance. At the beginning, it will be 0. You can also later add more accounts, as many as you want, but first you need to be verified, okay? If you want a demo simulation account, you can write to support, I need a free demo simulation account. They will set it up quickly. And under tools, you can access a web-based terminal. I don't really recommend it, but you get it. And we're gonna focus and don't let a MetaTrader 4 for Windows or for Mac, for iOS, plus mobile apps. But for this bootcamp, we focus on MetaTrader 4 for desktop, okay? Windows, iOS, Mac, whatever. Just you click download, the file saves, you run it and start the installation. You can choose where to install it. Usually it's fine to leave default program files, DC, and then just click next. The installation runs automatically. At the end, the browsers may open some MQL related page. You just can simply close it and MetaTrader 4 will start. Sometimes you will see a pop-up about the updates, so just confirm and move on. And now your trading platform might look completely different from mine at the start. A lot of windows, colors, lines, numbers. First thing, login, okay? We're gonna log in. There's a window called Navigator, okay? Click it. There you will see accounts. Right click and select open an account or login to trade account. You will see a list of available servers. In the email from the broker, you have account login, account password, and server name. If everything is correct, you will see in the bottom right corner of MT4 something like connected and kind of blinking data numbers. Okay, that means the platform is connected and working. So you can also open the Market Watch window, the list of instruments, and you should see the quotes changing live. In Market Watch, right click and select Show All. This displays all available instruments your broker offers, forex pairs, indices, commodities, stocks, etc. You don't need to go into details. Just now there's lots of them. And now for this bootcamp, your first task is to get comfortable with the platform. Hover your mouse along the top menu and the toolbar and click different things. Your mission is to simple. Click through options, see what opens. No, don't be afraid of breaking anything. You will see windows for indicators, different chart types, settings. Don't worry if you don't know what everything does yet. For now, the point is just to know where things roughly are. Because later, when I say open the terminal or open Market Watch, I want you to know what I'm talking about. Some features also have keyboard shortcuts. You can just open, close different windows, show hide terminal, open charts. When it comes to charts, you might start with some default chart that looks, messy. Too many grid lines with colors, dots everywhere. So let's clean it up. Right click on the chart and go to Properties. In the Colors tab, set background to white, text and foreground to black. Turn the grid color to none or the same color as the background, so it disappears. Up candle border and down candle border to black. Bull candle fill color to green. Bear candle will fill color to red. Line graph to black. Volume bars to black, or also off if you like. In the Common tab, uncheck chart on foreground. Okay, check show ask line. Uncheck show grid. Uncheck show volumes, check show object descriptions. Just click OK, and now your chart is much cleaner and easier to read. There are three basic chart types in MT4 in our platform, like line chart, bar chart, and candlestick chart. We mostly work with candlestick charts. We will talk in detail later about candlestick charts, what each candle shows, how to read them, what time frames mean, etc. You can also tidy up the toolbar by dragging groups of icons so they sit in one row and don't take up too much space. You will also see the different time frames, like 1 minute, 5 minute, 1 hour, 4 hour, daily, weekly, monthly. The lower the time frame, the more detailed the movement you see. You can switch between, them and see how the chart changes. For now, just pick something like H1, 1 hour as a default. On the left side of the main toolbar, you also see drawing tools, vertical line, horizontal line, trend line, channels, text labels, arrows. Just click them, place them on the chart, move them around. If a tool is selected, you see small squares or on the ends. It's active and you can move or edit it. Double click, just toggle that active state. If you make a mess and you should just to learn, you can clean everything up by clicking right on the chart object list. You will see a list of everything on your chart: lines, arrows, labels, text, everything. If needed, select everything, just click delete. Boom, you got a clean chart again. Okay, this is the basic level of comfort you want with the platform. You are not scared to click around. Just, once you have a chart set up the way you like it, and you can save it as a template. So now right click on the chart, make template, save this template, this look, call it something like bootcamp. Now when you open any new instrument, okay, go to the market watch, just click market watch, right click on the instrument, choose chart window, and you will get a default chart for that instrument. So we're gonna click right on that new chart, go to the template, choose bootcamp 1 chart, and your layout, colors and style will instantly be applied to the new chart. You can adjust colors wherever you like. The main thing is that you can see and understand what's going on. That's enough for the first setup. You know what the financial world is. You know the difference between investing and trading. You know what Forex is and why it's so big. You know how contracts work. You have opened an account with broker. You installed MT4 as a platform, MetaTrader 4. You've connected your account and cleaned your first chart. Great. So do the steps at your own, pace. Pause the video if you need to, and make sure everything works on your side. Because in the next episode, we will go into our candlestick, Japanese candlestick, type of charts and how to read them. We're gonna care about the time frames, and I will start opening our first trades and talk about market structure. More on that in the next part. I'm inviting you already. And remember guys, every Tuesday at 8 p.m. I run extra live workshops where we go deeper, share knowledge, and do all kinds of interesting things together. So see you there, take care, and see you in the next episode.